This week we got two very important events. First, we got the Fed interest rate decision on Wednesday, and then on Friday we got the non-farm payrolls report. After the Fed rate hike, gold bounced, and after the non-farm payroll report, gold dropped suddenly. And what if I say that you could predict all these moves before the release of this news? In this video, I will teach you how to trade the news. I will teach you how to spot sniper entries trading the news. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. And I want to start with the theory first. There are three types of the market trend. The market can be bullish, the market can be bearish, and the market can be in a consolidation. And in order to trade news, it is very important for you to learn to spot the moments when the market is consolidating. And when the market is consolidating, it usually forms the ranges, the horizontal ranges, and within these ranges, the market tends to set equal highs and equal lows. The main reason why the market is consolidating is the fact that at some moment the market participants find the so-called fair value price, the price that all the market participants agree about. The market finds the equilibrium. The market starts trading in sideways, but while the market is trading in sideways, the market participants are waiting for the news. They are waiting for the news to decide where to push the market next. And most of the time, the breakout of one of the boundaries of the range will quite accurately show you the future direction of the market. Now let me show you how it is related to the news trading. Remember that in the economic calendar we have a lot of news, and this news have different degree of importance. For our method, for the method that I'm teaching you, it is very important for us to focus only on important news. And in order to show only the important news, here on TradingView there is a special button, only high importance. We click that button and here we see only the important news. If you're trading just gold, you should consider only the US news. And if you're trading Forex, you should consider national news of the currency that you are trading. And now about the strategy. Here on the chart I have two red lines. These lines represent the news release on gold. And the first line is the release of the Fed interest rate decision, and the second one is the non-farm payrolls report. Before the news, you should monitor the price action. You should pay close attention to price action and you should know what is happening with the market. As you can see here in gold, we got a very strong bullish impulse. And then once the market reached that high, we started to consolidate. And you can see that here we have the classic example of the consolidation. The market found the fair value price and the market started to trade within the range. And then suddenly the resistance of the range was broken to the upside, and it happened before the news release. Why it happened? The fact is, traders, that smart money knew in advance what will happen. Big money knew in advance what Fed will do, and for that reason they start accumulating their trading positions. They already started to buy right here. And of course, the market reflects everything. And the fact that the market managed to violate the resistance of that range to the upside right here was the exact trigger. That was the trigger that bulls are here. Smart money are buying. And that was the signal for you that the news will most likely be bullish. Once the market closes above the resistance of the range, you have two options. You can either buy aggressively as the candle closes above, or you can buy in a retest. No matter what strategy do you prefer, you should always set your stop loss strictly below the lows of the range. Yes, that will be your safest stop loss. And for the target, usually you just apply the trailing stop. You don't have the fixed target when you are trading the news. You can have a chance to catch a very big winner. And the best strategy to follow is to just apply the trailing stop. The second event was the non-farm payroll report. And here was the exact moment when the report was released. Before the release of the news, you should monitor the price action. You should look for the consolidation. And over here, we have the consolidation. You can see that before the news, the market started to consolidate. The market started to consolidate because the market participants started to wait for the news, right? They knew in advance that news are coming, but the market participants didn't know in advance where the market will go. So the market started to coil. And moreover, over here, the market started to contract. You can see that here we got the contraction of a price action. And here we formed the triangle. And again, the logic here was to wait for a breakout of the boundary of that consolidation, either to the upside or to the downside. And you can see that before the news, suddenly, for some reason, market dropped. You can see that for some reason we formed a strong bearish candle right here, and for some reason bears started to push. Again, traders, smart money knew in advance where the market will go. They have the data before we do, and that is their edge. And for that reason, they start accumulating their trading positions before we have the news, right? But the market reflects their decisions, and we see that on the price chart. So you can see that the market violated the support of the range, and then after a couple of hours the market dropped suddenly, and you can see how crazy bearish movement we got right here. Once the price breaks the support of the range, you have two options: either to sell aggressively after the candle closed below, or to wait for a retest. And you can see that this time there was no retest, so the aggressive traders would make nice money right here, but the conservative traders wouldn't. Anyway, no matter how you decide to trade this one, you should always remember to set your stop loss strictly above the highs of the range. That will give you a very safe stop loss, and I would recommend trading without the fix, take profit, and instead applying the trailing stop. And remember that occasionally the market maker will manipulate the market. Here we got the PPI report, and you can see that before the report the market started to trade within the range. The market started to consolidate, and you can see that even though the range was broken to the downside, after the release of the news, the market started to grow rapidly. In order to not be caught by manipulation, remember to check the volumes. Checking the volumes, you should look for a volume spike on the breakout candle. So you should pick the breakout candle and check the volumes. And you can see that we got the volume spike when the market was testing the support of the range, but with the exact breakout candle we didn't have the volume spike. We got the volume spike when the market started to recover after that false breakout. Returning back to the examples that we discussed, here was the breakout candle of that horizontal range. And if we check the volumes, we can see the volume spike right here. So the volume spike matches with that breakout candle, and that confirms the breakout. That confirms that big money are buying right here. And then checking that range, checking that breakout candle, and checking the volumes, we can see the volume spike. The volume spike here confirms the strength of the breakout, and that confirms that it is not a manipulation. Before the important news, always monitor the price action. Always monitor how the price acts and look for the ranges. Look for the ranges and look for the breakout of the ranges. They will help you to accurately predict the future direction of the market. Traders, if you want to learn how to trade, if you want to see how I trade live, don't forget to check my trading academy. The link in the description below. Also, traders, if you have any questions, always feel free to ask me in the comment section. I always reply. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you soon. Thank you so much for watching, traders.